So I do welcome you again on our part B or part 2 of our video on how to create a trading plan. Now, in our previous video, we looked at why we should have a trading plan. And on this continuation, we're going to see what should be in a trading plan. And then we shall explain to you those things that should be in a trading plan, things that shouldn't miss out. Now, let me also clarify onto this. There is no a clear definition of how a trading plan should be. In other words, we don't have a specific structure that this is how it should be. However, when we are developing a trading plan, now, these are some of the things that shouldn't miss out in our trading plan, as we're going to see in this video. If you haven't liked, shared or subscribed, please do such that you do not miss out on this content. Share it to your friends and family and friends of the other friends of your friends as friends. Now, without any wastage of time, let's go directly and see what should be in our trading plan. So you should always outline your goals, your motivations. Why are you trading? Okay, in your trading plan. So now, it's always very important to define the reason as to why you're doing what you're doing. The reason as to why you're doing. The goals of what you're doing. Now, the same happens in trading. So before you start trading, you have to define what your goals are in trading. Okay? You should define them very well, as we're going to see, as I'm going to be showing you in this video. So, ask yourself why you want to become a trader and write down what you want to achieve from trading. So you can be like, yes, I want to trade, but at least on a monthly basis, I want to get this. At the end of the day, I want to have this. You know, you're actually setting, you happen actually to ask yourself why you are trading. Now, it's always not important for you to do something without any reason as to why you're doing it. So specify the motive of actually you trading. Just state that shouldn't miss out in your trading plan. So as you're developing your trading plan, make it specific. The reason I'm trading is this and this and this. Okay? I'm trading because I want on a monthly basis to be making this and this. You understand? So this is the beginning part of you coming up with a trading plan. Having done that, the next thing is you have to decide. This is something that shouldn't miss out again. Decide how much time do you want to commit yourself to trading. Decide how much time you want to commit to trading. So how much time are you committing to trading? Now, it's always very important as you're starting to trade, not to, do a full-time trading. I've actually happened to create a video on if you're to do Forex as a full-time job, the things that you happen to, to have to be in place for you to do trading as a full-time job. Now, if you happen not to have this, then don't do trading as a full-time job. Now, if you're doing other job, make sure you define the time that you commit to your trading. Are you going to be trading during the day because you work during the night? Will you do the trading for 2 hours, maybe in a day, or for 3 hours? However, the more time you commit to trading, the more perfectionism that arises when you are trading. So that's why we say you have to clearly define. Maybe I trade in the morning, I analyze, enter trades, and keep just watching them, and then maybe I'll do some other trades in the evening. Or maybe I am a swing trader, I do trades, maybe say I do trades at night, I analyze them, because in the morning or during the day, I'm working. So you also need to define the time you commit to trading, okay? It's important. You're not supposed to trade every time you want to trade. You should have a time schedule for your trading. Then if you're actually working, it's actually good. If you're trading and you're working now, look, you're actually having two income generating activities. Now you have trading and then you have a job. Some people think trading is just a place for them to actually come and get money, just like the way we see get rich quick schemes. No, this isn't how trading works. Now it's high time we consider trading as a business. It's high time we trade like as if we are professionals. It's high time we stop gambling on the trading platforms. It's high time we actually commit ourselves to trading and consider this for a long time period. So let's stop taking trading as just a place where we think we can probably just come and get money and walk away. Now, if you have such thoughts, then it's not going to work out for you. So let's treat trading as a business. And then if you're there trading, also make sure you stop scamming people. Okay? Stop scamming people. Tell people facts about trading. So once we do this, once we do this, it's going to be the only way we're going to bring this business to the first position. Okay? And then also to motivate more other people into the business and also help other friends of ours, that is the friends and families. Okay, so having done that, the next thing that you have to probably do is to define your goals. Okay, you specifically have to define the goals. Okay, the first one was outlining your motivations. Now we're looking at specifying. We're defining. You have to be specific. Any trading shouldn't just be a simple statement. Okay? That is any goal. Rather, any goal shouldn't just be a simple statement. It should be specific. Like I've said, I'm stressing this, specific to ideally understand this. Okay? So any goal shouldn't just be a simple statement. It should be specific, measurable, attainable, relevant, and time-bound. In other words, it has to be smart. For example, I'm going to give you an example of the goal that I actually happen to have. For example, I want to increase the volume of my portfolio by 30%. You see, I'm being specific. In the next 6 months, I'm specific on the increment. I'm specific on the time duration. Okay? On the time duration. It's smart because the figures are specific. You can measure success. It's attainable. It's about trading and there is time frame attached to it. Now, stop talking of things that are unworkable, things that are impossible, that I want to generate 100% on a 2 weekly basis. Now, talk of things that are measurable, attainable, measurable, attainable, sustainable, and also attached with a specific time frame. You should also decide the type of trader you're based on your personality, your attitude to risk, time committed, and capital. So all this should be specific. Don't be like, let's say I'm a position trader, but then I want to make 100% on a daily basis. You understand? So it's quite not possible. So you have to relate all this, the type of trader you are, your personality, and the capital that you have. So make sure you set things that are realistic, things that are general, things that are possible and attainable, not just trading far. Okay, so all this should be in a trading plan. You have to be specific. You have to be with a goal that is smart. Choose your risk to reward ratio. Always choose your risk to reward ratio. Specify in your trading plan. I'll always be risking 1% to make 3%. I'll always be risking 1% to make 1%. I'll always be making 1 to 8% just as Richard Dennis. So you need to be specific on the risk to reward ratio that you're going to use in your trading. Okay. Then having put that in your trading plan, also make sure that you decide how much capital you want to have for trading. So your trading plan should specify the capital. Okay. Should specify the capital. However, I've actually kept saying this, that the more small capital is never going to make you successful. it's always good to start with genuine capital. Okay, don't start with your $100 and then you want to remove a fortune from your $100. So always, if you want something more out of the markets, also make sure you invest something realistic in the markets to get something good out of the markets when you're trading. So you have to specify the capital that you're going to use in your trading plan. Assess your market knowledge. Get to know about the market you are about to start trading in. Now, assess your market knowledge. Get to know the market that you're trading in. Do you know if you're to trade the stock markets, do you know when the stock markets are more effective? Do you know when they actually more liquidity in the stock markets? Do you know which stocks are to be bought if someone is buying stocks and they shouldn't miss out on your list? So get to know the knowledge. Get to know the knowledge about that particular asset class that your industry or instrument that you're going to trade in. Okay, so if it's forex, make sure you have market knowledge about that particular currency or currency pairs that you are going to trade. Lastly, what shouldn't miss out in your trading diary should be start a trading diary. So make sure that in your trading journey or in your trading plan, there should be a diary. A trading diary, of course, defines or details information about a particular trade, the time of entry, the type of trade, the reason as to why you entered that trade, a lot more, the profit, the stop loss, and so much more to do with that particular trade. So that's why you always have to make sure that your trading diary should be based upon your trading plan. In other words, as you are planning to trade, there in your plan, there should be a trading diary. Hope we find this interesting. At the beginning of this video, I shared my contact in case you happen to find any difficulties to do with the trading anywhere. Please don't hesitate to contact us. We'll be in position to help you. Thank you so much. I do love you. Bye-bye.